Brent crude up past $90, the 10-year yield in America roughly flat, and gold quietly lower for a second week running, 1 week in July. 3 signals, one market caught between war and peace. Here's what actually happened. MoneySpider, Watching the Financial Web, Episode 2, The Whiplash, Signals over Narratives. Macro, the economy. Start with a number that looked like good news. June's inflation report. Prices up 3.5% on the year, well below the 3.8% expected, and cooler than May. Core inflation flat on the month. Producer prices fell too. Retail sales were holding up, and weekly jobless claims dropped to 208,000. On any other week, we'd have led with that, not this one. The market looks at a cooling inflation report and leaves the odds of a September rate hike near 3 and 4. Because between that report and Monday's close, oil pushed past $90 a barrel, and the war entered another week of strikes. The Fed's new chairman told us he'd stop leaning on backward-looking statistics. This is what that looks like. Good data being set aside because the forward risk is moving faster than the number could describe it. Micro, the stocks. JP Morgan opened bank earnings season with its largest quarterly profit on record. Jamie Dimon's words, conditions are getting close to as good as it gets. And yet the week's micro story was written elsewhere. On Friday, chip stocks had their worst session in months. Taiwan Semiconductor raised its spending forecast sharply, and a Chinese startup, the aptly named Moonshot, released a model called Kimi K3 that benchmarks near the best American labs at roughly a third of the price. A second DeepSeek moment. Then on Monday, the chips came back. The semiconductor index rising. Alphabet up almost 3 on a report it's building its own Gemini integrated server chip. 2 very different stories in 1 week. American banking near a peak, and American AI valuations facing their first credible price competition from China. This week's mega cap earnings, Alphabet, Tesla, Intel, will tell us which one of the markets should be believed. Demos, the people. The University of Michigan's early July sentiment reading jumped nearly 10% to 54.4, its best level since February. Every component improved. Read the fine print though, and the story changes. More than 7 in 10 of those interviews were completed before the 7th of July, before the strikes resumed, before petrol prices turned back up. This is a photograph of a lull that had already ended by the time it was published. Inflation expectations a year out eased to 4.2%. The 5-year measure held at 3.3. Encouraging on their own, but we expect the headline to be revised down or reversed. That's when the final July reading lands at the end of the month. We're telling you that now, not after it happens. Polis, the state. Over the weekend, the escalation we'd been tracking became sharper still. Iran's Revolutionary Guard again declared the Strait of Hormuz closed and said it had intercepted 4 vessels attempting to transit. Washington disputes the claim, and US strikes continue. And then on Monday, the other direction. A high-level round of talks opened in Switzerland, the American vice president across the table from Iran's parliamentary speaker, with Qatar and Pakistan mediating. By the close, both sides had agreed to set up communication lines to keep Hormuz open, and a roadmap towards a final deal within 60 days. The blockade and the roadmap are both real, and 3 deadlines are still clustering in August. The toll-free period, the 60-day clock, and the license governing sanctions relief, all within days of each other. Flows, the capital. Brent opened the month near $72 a barrel. By Monday it had topped 90, more than 14% higher across the fortnight. That's the real transmission mechanism behind our opening number. Every extra dollar on oil makes a September hike in interest rates a little more likely, whatever June's inflation report said. And here's the detail that should not be overlooked. Gold fell again for a second week on a week of active strikes. The metal whose job it is to rise when the world looks frightening simply didn't. The dollar and treasury yields did the frightening instead, the 10-year round tripping to a 2-month high and finishing near 4.5%, roughly flat, and close to $8 trillion sitting in money market funds still on the sidelines. When gold stays silent through a war, that silence is worth listening to. The tension map. Look at what actually moved. Fed hike odds were elevated, nearer 3 and 4 for September. The 10-year a round trip to nowhere. Consumer sentiment, a headline jump we don't yet trust. Gold, a second week of fading when it ought to be rising. And Brent crude, breaking cleanly away from the pack the moment the strait reclosed. Two lines did almost all the work this fortnight, oil pulling up and gold refusing to follow. Master signal is the Whiplash. Here's this week's signal. Not a new fracture, the same one whipsawed. Cool June inflation said the price arm of consumer fracture was healing. 10 days of strike, a reclosed strait and $90 oil said otherwise. And then on Monday, a diplomatic road pulled the other way. All the while, gold stays silent. We're calling it the Whiplash. Watch 4 things. The University of Michigan final July reading, the FOMC decision on the 28th and 29th, the August deadline cluster for diplomacy, and whether gold silence holds a third week. We remain calm, we remain curious, and we'll see you next week. Systems matter. Systems leave signals. Until next week, keep watching the web.